Today, cryptocurrency markets surge in a stunning recovery from yesterday's sell-off. Ukrainians turn to stablecoins as the country's central bank halts cash transfers. And MicroStrategy's Michael Saylor tells us how crypto technology could end cyber attacks as we know them. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto markets rallied following that steep sell-off yesterday morning. The market as a whole rose 8% by noon Eastern. Bitcoin gained nearly 9% since yesterday, climbing back above $39,000. And that's just about where it started on Monday. Ether rose by 10% in the past 24 hours, and the Link token, which runs on the Chainlink network, rebounded by more than 13%. We spoke to Valley Global's Michael Rinko about this recovery and how a refusal to ban Russia from the SWIFT payment system is playing into the price moves.
I think yesterday was a pretty exhausting day for most traders, at least the ones that I know. It's important, I think, to realize that most of the market still considers crypto a risk-on asset. So whenever there's an exogenous shock to the system, which the Russia-Ukraine situation would be a good example of, risk assets tend to sell off. So we've seen that with crypto over the past few days, and I think President Biden's decision not to impose, the harshest of sanctions on Russia helped ease people's kind of worst fears, and which led to a risk-on move. So I think some of the takes I've seen on Twitter kind of reduce it down to being, if Russia's kicked off SWIFT, Bitcoin goes up, or that's good for Bitcoin. And I don't necessarily think that's the case. I think there's maybe a more nuanced logic there to that, but I think in the short term, if Russia's kicked off SWIFT, that's probably a bad thing for Bitcoin, because that would lead to a risk-off move. The Russian economy would collapse further, and I think that would weigh on all risk assets. But I think kind of the deeper game theoretic argument that maybe some Bitcoin or crypto proponents are making, the U.S. dollar has been the world's reserve currency. It's what every single central bank has held on their balance sheet, and it's what most trade is settled in all around the world. So I think when people think about Russia being kicked off SWIFT, their next assumption is that Russia starts to settle in currencies that are not the U.S. dollar, which would then weaken the U.S. dollar and potentially give Bitcoin a leg up in being the next global settlement currency.
Okay, here are some headlines you should also know about. First, Ukrainians are turning to stablecoins to protect their cash. The nation's central bank halted electronic transfers of digital money after the president of Ukraine declared martial law. That ban includes payment apps like Venmo and PayPal. Instead, people are turning to stablecoins like Tether, which is backed by the US dollar. Ukrainian crypto exchange Kuna shows customers paying a premium for the stablecoin, about $1.10 per $1 worth of Tether's USDT. You can find that full story on CNBC.com. Next, Senator Ted Cruz is reaffirming his status as a big fan of Bitcoin. Cruz spoke at the annual Conservative Political Action Conference, or CPAC, where he praised Bitcoin's decentralized nature, condemned Canada's seizure of funds donated to protesting truckers, and denounced China's ban on cryptocurrencies.
China recently banned Bitcoin because they can't control it, which is the exact same reason Elizabeth Warren hates Bitcoin.
Finally, two publicly traded crypto exchanges reported earnings yesterday. Coinbase and Block both beat Wall Street's expectations, with Block reporting nearly $2 billion worth of revenue in Bitcoin sales. Coinbase made $500 million more than Wall Street expected it to, but the company also warned that it's seeing a slowdown in trading volume in the current quarter. Now for our main story of the day. I recently spoke to Michael Saylor, co-founder and CEO of MicroStrategy. It is one of the largest corporate holders of Bitcoin, with $4.8 billion worth of the cryptocurrency on its books. We covered the company's Bitcoin adoption, U.S. regulation, and more. Here's what he told me about the recent price volatility and how crypto could put an end to cyber attacks like the one Russia is carrying out on Ukraine. Joining me now on Crypto World is Michael Saylor, the co-founder and CEO of MicroStrategy. Michael, thank you for joining us. In the past, you've attributed crypto market volatility to high-speed trading. Is that what you think is at play these last few weeks?
I think that the volatility is driven by the immaturity of the asset class, and that means the lack of wash trading rules You can buy it and sell it in the same hour and harvest a tax loss. I think that's fairly immature. I think 20x leverage on the offshore exchanges. I think the wild west of crypto derivatives. I think cross-collateralization of altcoins into ETH, into Bitcoin through DeFi exchanges on a Saturday night, through a very thin piece of liquidity on the 177th biggest coin. All of those things are a recipe for volatility. And then the uncertainty about the regulatory environment, because as regulation comes, it has an impact on all these different crypto systems, and they're all cross-collateralized to each other. So I'd be surprised if there wasn't volatility. It comes with the territory. There are pros and cons. I think that the volatility will be damped as the regulation progresses, and that'll encourage institutional adoption.
With respect to the use cases that most excite you for Bitcoin, beyond it being a speculative tool to put on a company's balance sheet, I mean, you're seeing El Salvador experiment with it as legal tender. You're seeing Ukrainian, militant groups fundraising in crypto because banks are blocking payments into the country. You are seeing it used in Canada because of trucker protests. There are all these different ways in which, currency becomes this way to liberate actions. I mean, there's also been talk that, Russia might get around the sanctions regime via crypto rails. And I just wonder what most excites you about Bitcoin and the use cases today, and perhaps how it might be used in the future.
I think if you look at it as digital property, it's pretty clear there are billions and billions of people that would rather own digital property than physical property. And I think that the most forward-thinking use case is Bitcoin as digital energy. If you go on Twitter, you find in 1 hour, 500 Michael Saylor bots. They all get spun up. If you go on YouTube, there are about 500 to 1,000 Michael Saylor Bitcoin giveaway scams every week. We take them down every 15 minutes. The world, cyberspace is beset by scammers, phishers, denial of service attacks, spammers, and it's never been worse. It's literally awful. And the reason it's awful is because no one's got any skin in the game. Or another way to say it is there's no conservation of energy in cyberspace. I can go into a hotel in the real world, post a credit card, smash up the hotel, and they charge me money. But what if I could go into every single hotel on Earth, in every hotel room in every hotel on Earth, using a Python script and smash them all up and not get charged any money, right? The entire world would come to a grinding halt. And so that's the status quo on Facebook and YouTube and Twitter and Office 365 right now. And you're watching the front page of the paper. If you look at the Wall Street Journal today, massive amount of cyber attacks being launched on Ukraine right now. They're all denial of service attacks. Denial of service attacks is like when someone hits your website with 15 million requests in an hour. They can do that because it doesn't cost them $1 a request or $10. So if you want to solve the problem of cybersecurity and make cyberspace safe for children, and if you want to eliminate hostile cyber attacks, and if you want to clean up Twitter and YouTube and stop con men and phishing and scamming, the simple solution is let someone get an orange check mark next to their name if they post $10 worth of Satoshis. And you would have 1 billion orange checks. And now you lock down all websites and all inboxes and all comments to people with an orange check. And of course, you would only have to post $10 once in your life, which is fine because you're not going to denial of service attack someone. But if I'm a hostile bot, like these people that actually impersonate me on YouTube, they have 40,000 live bot listeners. They would have to post $400,000 in Bitcoin every 10 minutes or every 15 minutes because they refresh every 10 minutes, Mackenzie. If you did that, it would cost you $40 million a day to launch that attack instead of nothing. And so the compelling application of Bitcoin is it's a layer of monetary energy that you can overlay over the digital information of the first generation internet.
That's fascinating. And on the topic of Lightning, obviously that has enabled, payments to be a lot faster, a lot cheaper.
But at least in the US, I mean, the IRS, the way that they regulate around Bitcoin and considering it a property, every time you transact in Bitcoin, it's technically a taxable event. You don't have a de minimis exemption like you do with other assets. So how real is Bitcoin as a currency, like the use case of Bitcoin as a currency in the US?
Yeah, I think that Bitcoin is best thought of as property, not a currency. Currency is defined by a nation state, and unless the nation state allows you to transfer the asset tax-free, it'll never be a currency. They may allow you to transfer de minimis amounts, right? If they gave you a $600 carve out, which was what I saw on the last bill circulating around the Senate, it would work for small use cases, but it will never be a competitor to a currency. I think it's best thought of as property, and the same way that you have a second home for rental income, and if you had a home and then you went to Starbucks, you wouldn't try to break off a part of your house to pay for coffee. You would simply set up a credit line, a home equity line, or you put debt against your house. You would convert that into dollars, and then you would pay for your coffee with the dollars. In fact, it makes a lot more sense to use it as property than as a currency anyway, because if you had $1 million of Bitcoin and held it for the rest of your life, and then you borrowed against it, as long as you keep your expense ratio lower than the expected appreciation of the asset, you can do that forever, right? So it's just much wiser financial decision. Go short the currency, go long the property. And that's a time-tested investment strategy by pretty much every successful investor.
Before we go, Anthony Pompliano took to CNBC's Squawk Box this morning to discuss Bitcoin's latest price moves. Take a listen.
And so what I think is, we got to be careful of is not judging the performance of these assets based on a couple of hours. But I do think that the prevailing narrative of Bitcoin being that digital gold, being a censorship resistant technology, especially when we see sanctions, not only the United States to Russia, but we see China sanctioning Raytheon and Lockheed, or we see Canada sanctioning some of their own citizens. I think this is going to become a bigger and bigger narrative, and Bitcoin's going to continue to serve as one of the solutions as the world kind of wakes up to the fact that financial censorship is default.
And that's all for Crypto World today, but we will be back again on Monday with more, so we'll see you then.